Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in this today's webinar organized by WBSB of ICI on very important topic, that is auditors' responsibilities and going concern. As we all know that the topic is very important and very relevant in today's time, as well as the all ever favorite time, that is the going concern. We are having with our learned speaker, CA Paras Chaddaji. So on behalf of WASP of ICI, I extend my warm welcome to you, Paras Chaddaji. Namaste, Paras ji.
Thank you so much, sir.
I
Good
also
evening.
I also welcome all the good evening. I also welcome all the participants of today's webinar. Before we formally start our today's webinar, it is my proud privilege to share with all of you the brief profile of Paras Chatterjee. Paras ji has qualified his chartered accountant examination in May 2012 and having post qualification experience of more than 10 years. He has completed his India certification course in 2018 and BRSR certification course in 2023 from Institute of Chartered Accountant of India. Currently, he is working as a senior manager in Financial Accounting and Advisory Services (FAAS) division of Ernst and Young. We are conducting the various work like gap conversion, as well as providing accounting assistance on complex transactions like business combination, like financial instruments like consolidation, leases, and revenue recognition, etc. He's also rendering corporate training on various topics such as overview on NDS, revenue, leases, borrowing costs, etc. Prior to joining Ernst& Young, he was associated with SR Dinodia and Company LLP as a part of its assurance team. So list is the biodata is still very vast. So without wasting much more time, I request Parasji to please deliberate on the topic on going concern. Over to you, Parasji, please.
Thank you so much, sir, for giving me this opportunity to deliver this technical session on SA 570. So, as mentioned, our today's topic is auditor's responsibility and going concern. So, before directly jump into the standard, I want to give brief introduction about this standard. So, this standard is applicable on the auditor and not on the management, because this is the standard of auditing, and hence auditor is required to deal with this standard in its audit report. Now, second point arises, when this standard of auditing is applicable on auditor, then why management would make this going concern assessment test? So, because accounting standard and Indias are applicable on the company, and hence it is the primary responsibility of the management to prepare its financial statement, and hence there are three fundamental accounting assumptions which is given in AS1 and NDS1, that is going concern, accrual, and consistency, and hence management is also responsible to prepare its financial statement using going concern assumption. Now, second question arises, when the management is required to make this going concern assessment test. So if as the balance sheet is prepared on the 31st March on every year in India, so management is required to make this assessment on every reporting date, means 31st March. Now, third question arises, what is the period which is required to be covered by the management while making this assessment? So management may take 12 months at least from the date of financial year. He can consider, or the management can consider 2 year as well. Management consider 5 years. Management can consider 10 year, but it cannot be shorter than 12 months. And while making the balance sheet or the financial statements, you can say it is assumed that assets and liabilities will be realized and discharged in the ordinary course of the business, because management is preparing its financial statement using going concern assumption. If the management is not preparing its financial statement using going concern assessment, then the financial statements are required to be prepared on liquidation basis. So our today's agenda, or which we are going to discuss, is first one is introduction, second one is interlinkage of SA with AS and NDS, third one is responsibility of the management, then the factors or the indicators which the management would consider while making this going concern assumption is, first one is financial indicator, second one is operating indicator, and third one is other indicator. Then what is the responsibility of management auditor, we will discuss. Then what is the risk assessment procedure and related activities which the auditor is required to follow, we will also discuss the same. Then implications in the auditor's report, and then we have few illustrative format for the auditor's report, and then I have few case study, and in the last we will have one question answer round. So let's start. First slide is related to introduction. So what is the background of this standard? So before this standard, means SA 570, we were having AAS 16, which was applicable from 1st April 1999. After that, institute revised this standard and make the auditor's responsibility in quite detailed, and now this revised standard is applicable from 1st April 2017. So this is the revised essay. Now what is the scope? So it deals with the auditor's responsibility in the audit of the financial statement relating to going concern matter, and how the auditor will deal with its audit report relating to going concern, means what are the implications for the auditor's report. So now, as I told you, there is interlinkage between SA, NDAS, and AS. So para 10A of AS1 deals with this going concern assumption. So as I told you, there are three fundamental accounting assumptions. First one is going concern, second one is accrual, and third one is consistency. So going concern is one of them. So while preparing the financial statement, going concern assumption will be taken care by the management. So it is the condition, going concern is the condition which the enterprise would consider, and it will continue its operation in the foreseeable future. And uh, the enterprise has no intention or the necessity of the liquidation or curtailing materiality the scale of the operation. And last one is negative disclosure. What means the negative disclosure? It means, as I told you, the financial statements will be prepared using going concern assumption, and if the management is not preparing its financial statement using going concern assumption, then the disclosure is required in the financial statement. Now second point is Ind AS 1, and here is para 25 we have. So it says that financial statements are required to be prepared on going concern basis unless management either intends to liquidate the entity or to cease the trading, or has no realistic alternative but to do so. So this going concern assumption is tested by the management, as I told you. Now third point is mandatory disclosure irrespective of the fact whether or not financial statements are being prepared on going concern basis. So this is the difference between AS and Ind AS. This is the difference between AS and Ind AS. AS says if the financial statements are not being prepared using going concern assumption, then disclosure is required. But Ind AS 1 para 25 states that there is mandatory disclosure required regarding going concern, irrespective of the fact whether the financial statements are being prepared using going concern assumption or not. Then if the financial statements are not being prepared on going concern basis, then the management shall disclose events or conditions that cast significant doubt on the entity's ability to continue as going concern, and what is the basis for the preparation of the financial statements, means the liquidation basis or something else. Now there is para 2 in 570 which deals with this going concern. So financial statements are prepared on the assumption that the entity is going concern and will continue its operation for the foreseeable future. So general purpose financial statements are prepared using the going concern assumptions basis of the accounting unless management either intends to liquidate the entity or to cease the operation, or has no realistic alternative but to do so. So the definition given in Ind AS and SA 570 is same. So that was the interlinkage between AS and AS and SA 570. Now, what is the responsibility of the management? So management is responsible to ascertain the going concern assumption. So management shall assess the entity's ability to continue as going concern. The judgment about the future is based on the information available at that time at which judgment is made. So it means on 31st March. So management may also make this assessment or the preliminary assessment, we can say, before 31st March, but the final assessment will be made on 31st March. And if the financial statements are not being prepared using going concern basis, then that facts would be required to be disclosed in the notes to accounts. Then what are the indicators which needs to be considered? So as I told you, there are three indicators. First one is financial indicator, second one is operating indicator, and third one is other indicator. So let's assume this is the balance sheet of two companies. So the company one is X Limited and companies second is Y Limited, and this balance sheet pertains to 31st March 2023. So the share capital of this company is 50 lakh rupees and it has accumulated losses because reserves and surplus are negative. So you can see here the net worth of the company has been eroded by 40 lakh rupees. Further, this company is having current liability of 50 lakh rupees and the total assets of this company is 35 lakh rupees. So this 35 lakh, or you can say 50 lakh, exceeds this 35 lakh. So what does that mean? It means if the company dispose of its all its PPE and realize its current assets, then also it would not be able to repay even if its current liability. So there is a big question mark on the existence of the company. How would the company would survive? So there is a material uncertainty because the net worth has been eroded and its current liability is exceeding its total assets. So there is a question mark on the existence of the company. So how the company would survive? On the other hand, if you will see the balance sheet of Y Limited, it has accumulated profit because reserve and surplus is positive and net worth is also positive. The current liability of this company is 30 lakh and the total asset of this company is 2 crore 5 lakh. So there is no issue in the financial statements of Y Limited, but there is a material uncertainty exists in the financial statements of X Limited regarding going concern. So I am not saying this company X is not a going concern company. It can be, there can be mitigation plan available with the company, but material uncertainty exists in the company which is required to be disclosed in the notes to accounts. So these were the financial indicators. So some of the examples of the financial indicator could be, and this is the inclusive list and not the exhaustive list. So first one is net current liability position. So as I told you in my previous slide, the current liability of the company is exceeding its total assets. So as I told you, it means even if the company dispose of all its PPE and realize all its assets, then also it would not be able to repay its current liability. So this is one of the indicator that material uncertainty exists in the company. Again, I am not saying this is not a going concern company. Mitigation plan can be available with the company. Second one is no realistic prospects regarding the repayment of the borrowing. So there is a due date. Suppose you have taken a loan from the market and there is due date of this borrowing, but you are not able to repay this borrowing. So this is the another indicator that the company may have significant doubt on the ability to continue as going concern. Third one is excessive reliance on short-term borrowing for the long-term assets. So if the company is taking short-term loan for the long-term assets, then it indicates that the company is making the reliance on the short-term borrowings because the bank has denied to give the long-term loan to the company because there may be chances that this company would not be able to repay its loan in the long term, and hence bank is ready to provide the short-term loan but is not ready to provide the long-term loan to the company. Fourth one is withdrawal of support by the creditors. So let's assume earlier the creditors of this company was giving the credit period of, let's say, 30 days or the 60 days or the 90 days or the 180 days, as the case may be. Now what the creditor has done, they have told the company that if you will pay the money on the order, then we will deliver the goods, otherwise we will not deliver. So this is the withdrawal by the company, withdrawal of the financial support by the creditors. uh, Next is negative operating cash flow. So if the company is earning negative cash flow, so you can check this from your cash flow statement as well. If the company is having negative operating cash flows, it means the company is incurring losses. Then this is the another indicator that may cast significant doubt on the company's ability to continue as going concern. Next is adverse financial ratios. So generally, a company can take or a company can have debt equity ratio in the ratio of 2 is to 1. So if the share capital of the company is, let's assume, 1 lakh rupees, so it can take the loan up to 2 lakh rupees generally, or it can have 3 lakh rupees loan, or it can have 4 lakh rupees loan. But suppose if the share capital of the company is 1 lakh rupees and company has taken a loan of 20 lakh rupees or the 25 lakh rupees or the 50 lakh rupees, then this is a big question mark on the company's ability to continue as going concern, because how would the company would be able to pay this loan? Okay. Next one is substantial operating loss. So as we discussed or we saw in my previous slide that the X Limited is having substantial operating losses. So it could be one of the reason which may cast significant doubt on the company's ability to continue as going concern. Next one is areas of dividend. So your company has declared the dividend, but is it has not been paid to the shareholder, or yet your company has not declared any dividend from a long period of time. So this could be one of the indicator as well regarding the going concern issue. Now inability to pay creditors on due date. So as we discussed, the creditors were providing the 30 days period or the 60 days period as the credit period, and now the due date has come but the company is unable to repay amount to the creditors. Next is inability to comply with the loan terms. So let's assume your company has taken a working capital loan, and it says your company is required to submit a stock statement or the data statement at every month or at the quarter end, and your company is unable to submit this stock statement or data statement to the bank, and the bank has reduced the working capital limit or has stopped this working capital limit. So this could be one of the indicator then why the company is not submitting his stock statement or data statement to the bank. So it could be one of the reason regarding the going concern. Next is change from credit to COD with suppliers. This we have already discussed that now the creditors are saying if you will pay the money to us, then we will deliver the goods, otherwise we will not deliver. Last is inability to obtain financing for essential products. So let's assume you were having a negotiation with the bank regarding the loan for your products, and now the bank has realized that this company would not be able to repay my loan on the basis of the financial statements. So this bank has denied to give a fresh loan to the company, and hence it could be one of the indicator for the going concern. Again, I am not saying this company is not a going concern company. Action plan or the mitigation plan could be available with the company, but there is a big question mark, or you can say material uncertainty exists in the financial statements of the company, which may cast significant doubt on the company's ability to continue as going concern. Now, second indicator is operating indicators. So what could be the operating indicators? First one is intention to liquidate the entity. Under operating indicators, you are not in financial crisis. Your company may be the cash rich company, but these are the indicators which are other than the financial indicators, and you may face going concern issue for these indicators as well. As the first example states, intention to liquidate the entity. So management has not the intention to continue its business, even though the cash is available with the company, everything is going well, but the management has intention to liquidate this entity. Second one is loss of key management without replacement. So let's assume there is a company X Limited, which is having a production head. Now what happened, this and the rate of defect in the quality of the product is, let's assume, 0.5% or 1% when this production head was doing his job. Now what has happened, this production has left the organization and has joined another organization, and suddenly the defect rate in the quality of the product has increased to 5% or the 10% or the 20%, 20% of the product. So your product was carrying very good image in the market, and now suddenly it is not carrying such a good image as it was carry earlier. So people may not be interested to buy the product of your company due to increased in the defect rates. So this could be one of the reason that your company may face going concern issue. Now third one is labor difficulty. So your company is facing labor difficulty means your company is facing issues regarding the hiring of the labor, और लेबर ने स्ट्राइक स्टार्ट कर दी है कि हमारी मांगे पूरी करो. So that kind of scenario, and your if you are facing the labor difficulties, then you would not be able to manufacture your product, and if you will not be able to manufacture your product, you will not be able to sell this product in the market, and hence you may face the going concern issue. Next is shortage of important supplies. So now let's assume your finished goods is required raw material, and this raw material is shortage in the market. There is a shortage of this important supplies or the important raw material in the market, and you are not able to manufacture your goods, and hence you are not able to sell these goods in the market. So you may face again going concern challenges. Next is emergence of highly successful competitor in the market. So best example of this high emergence of highly successful competitor is Jio. When Jio entered in the market, so the small companies like Aircel, Arcom, BSNL, MTNL face many issues, and the revenue of this company significantly decreased. So the best example of this successful competitor is the Jio. Then loss of key customer. So let's assume there is company X Limited, and this X Limited is OEM, that is original equipment manufacturer, and they are preparing gear for the Maruti, let's assume. Now what has happened, Maruti has noted that the defects in the product of this company is increasing day by day, and they have sent several reminders to this company that please improve the quality of your product or the quality of your gear. But this company was unable to increase the quality of its product, and hence Maruti has cancelled the contract with this customer. So, and if you have seen practically, most of the OEM companies are having only one customer, which is the major customer for the company. So if you have lost your major customer or the key customer, then you may face going concern issue. Again, I am not saying this is not a going concern company. Mitigation plan could be available with the company. Then loss of franchisee. So let's assume hypothetically I am having a outlet of Domino's. Okay. So what happened? HO asked me to do the inspection whether the outlet is designed as per the specification of this HO or not, and whether the quality of the product, means the pizza, is as per the specifications or as per the norm of the HO or not. So when they did the inspection, they found that the quality of the pizza is very good, but the outlet is not designed as per the specifications provided by the HO, and they cancel the franchisee, cancel the license of this franchisee. सो मैंने भी बोल दिया ठीक है, मेरा जो पिज्जा है वो तो मेरी क्वालिटी की वजह से बिक रहा है, आपके आउटलेट की वजह से थोड़ी बिक रहा है, और मैंने डोमिनोज का नाम हटा के वहां पे नाम रख दिया आउटलेट का पिज्जा वाले. नाउ व्हाट हैपेंड, when I change the name of this outlet from Domino's to Pizza Wale, the footfall of the customer has decreased significantly because वो लोग तो Domino's के नाम से आ रहे थे, मेरे पिज्जा की क्वालिटी की वजह से नहीं आ रहे थे, and hence this is the big issue, or you can say the significant you can say the material uncertainty regarding the going concern, because now I am not able to sell my product as much as I used to do. Next is loss of major supplier or the key supplier. So let's assume again you are purchasing the goods from a distributor, and which is required to manufacture your product, your finished products. Now what has happened, you are having some dispute with this distributor, and now this distributor has denied to supply the product to your company, and hence if you are facing the issue regarding the purchase of raw material, you would not be able to manufacture the product, and hence you would not be able to sell the product, and your company may face again going concern issues. Then loss of a major market. So best example of this loss of a major market is mobile phone. So approx 2 decades before, we all were using feature phone, which were manufactured by Nokia. Now what has happened, after few years Google came up with this Android software, and the Samsung grabbed this opportunity, and they started to prepare the Android phone, or you can say the smartphones. Okay, and the major portion of this market was grabbed by the Samsung, and people shifted from the feature phone to the Android phone. So these all again the indicators and the mitigation plan could be available with the company to overcome these situations. Third is other indicator. Now what is other indicator? Second one is non-compliance with the capital or other statutory requirement. So what could be the example? So there is IRDA Act 1938, means Insurance Regulatory Development Act 1938, and every insurance company is bound with the provisions of this IRDA Act 1938. And Section 6 of this Act requires that every insurance company is required to maintain at least uh, minimum capital to survive in the market. So if your company has not maintaining such capital, or you are, or the company is not fulfilling other statutory requirements of this IRDA Act, then this IRDA may cancel your contract or your license. So this is one of the indicators. Second is pending legal or regulatory proceedings against the entity that may, if successful, result claims that the entity is unlikely to be able to satisfy. So what could be the example? Suppose your company is having contingent liability. So income tax demands are there, GST demands are there, other demands are there, and your company is having such kind of scenario, means your net worth is already negative, your current liability is already exceeding your total assets, and moreover you are having GST demands, you are having income tax demands, you are having other demands. And if you loses these demands, or you loses this case, your company would not be able to repay the money, and hence against it is again, it is a material uncertainty in the company regarding the entity's ability to continue as going concern. So third one is changes in law or the regulation or the government policy expected to adversely affect the entity. So what could be the scenario? So let's assume in Bihar, the Bihar government has banned the sale of liquor. अब पीने वाले तो अपना जुगाड़ ढूंढ लेते हैं, लेकिन what about the soda company which is existing in the Bihar? So this, the sale of this soda company has been decreased drastically because the government has come up with the plan regarding the ban on the liquor. Now there is a no ban on the sale of soda. There is a ban on the sale of liquor. But due to changes in law or due to changes in government policy, you can say this soda company or the revenue of this soda company has been affected significantly. And now there is a question mark on the soda company's ability to continue as going concern. Now, what are the responsibility of the auditors? So these were the indicators, financial indicators, operating indicators, and other indicators, which the management has identified and identified auditor cannot perform the work on behalf of the management. So auditor has the responsibility and conclude on the appropriateness of the management's use on the going concern basis of accounting in the preparation of the financial statements. So auditor will gather sufficient and appropriate audit evidence to check whether the management has done going concern assessment correctly or not. Then, based on the audit evidence obtained, auditor will conclude whether any material uncertainty exists related to the events or conditions that may cast significant doubt on the entity's ability on the going concern. If the material uncertainty exists, then the auditor will report in his report accordingly. And if no material uncertainty exists, then the auditor will issue unqualified opinion. Then auditor shall remain alert throughout the audit for the audit evidence on the entity's ability to continue as going concern and to disclose the facts in the auditor's report in accordance with this essay. Now, what are the risk assessment procedures and related activities? So as I told you, suppose I am doing the audit for for the financial year 2022-23. So the management is required to make this going concern as a assessment on 31st March 2023. But if the management wants, or you can say you have started your interim audit on 1st January 2023. So you may ask with the management whether you have done any preliminary assessment. Why the word preliminary assessment has been used? Because the management is required to make this assessment on 31st March 2023. But since you have started your since you have started your audit, so you may ask with the management whether you have done any preliminary assessment or not. So the auditor shall determine whether management has already performed a preliminary assessment on the entity's ability to continue as going concern or not. If this preliminary assessment has been performed by the management, then also final assessment will be made on 31st March 2023. So if such an assessment has already been performed, the auditor shall discuss the assessment with the management and determine whether the management has identified any events or conditions. So what could be the events or conditions? As we discussed financial indicators, as we discussed operating indicators, and as we discussed other indicators. So whether the management has identified any events or conditions individually or collectively that may cast significant doubt on the entity's ability to continue as going concern. And if the management has identified these events or conditions, if so, what are the management's plan to address them? So here they are talking about the mitigation plan. What are the plans available to overcome this situation? Now, second is if such an assessment has not yet been performed. So you have started your audit on 1st January and you asked with the management whether you have performed the preliminary test regarding going concern. So management gave the answer, no, we have not yet performed this assessment. Then the auditor shall discuss with the management what is the basis for intended use of this going concern basis of accounting, and inquire the management whether events or conditions exist that individually or collectively may cast significant doubt on the entity's ability to continue as going concern. So while evaluating the work performed by the management, the auditor shall evaluate management's assessment of the entity's ability to continue as going concern. Auditor responsibility or the auditor role is only limited to evaluate the work or the assessment performed by the management. Auditor cannot perform or auditor cannot assess the going concern assumption on behalf of the management. Auditor will only evaluate the management's assessment of the entity's ability to continue as going concern. Then what about the assessment period? We have already discussed it. The auditor would cover the same period as that used by the management as per the applicable financial reporting framework. So it could be 1 month, 1 year, it could be 2 year, it could be 3 year, it could be 10 year, or the longer period if required by the law or regulation. If the period is less than 12 months from the date of the financial statement, then the auditor shall request management to extend it to at least 12 months from the date, from that date. That date means 31st March. So what is the logic why the standard has inserted this line? If the period is less than 12 months from the date of financial statement, then the auditor shall request management to extend it to at least 12 months from the date. So again, let's take an example. There is company X Limited, which is preparing its financial statements for the period ended or for the year ended 31st March 2023. Now, what has happened? This company has considered this period, let's assume, for 6 months. So the company is saying we are a going concern company for the 6 months, means you can say September 23. And auditor is also required to cover the same period as that have been used by the management, because auditor is only evaluating, the work performed by the management. So auditor has also considered that the company is a going concern company for next 6 months, means September 23. Now let's assume this company in the month of November 23, let's assume they have liquidate or they have ceased their operation. They do not want to continue its business and the management has ceased the operation or has wound up the company. Now investors or the stakeholders would ask from the company, you have shut down your business in the month of November 23, but you did not disclose this intention in the notes to accounts, then you are going to wind up this company. So management would say, we were the going concern company for the 6 months because we have considered the 6 months as a assessment period, and we were the going concern company, hence we have not disclosed these facts in the balance sheet because we were the going concern company till September 23. Then they will ask from the auditor, okay, management has not disclosed their intention in the notes to accounts, but why you did not disclose these facts in your audit report? Because ultimately you are signing your audit report and this is the material uncertainty, or you can say the big impact on the life of the company. They have wind up the company in the month of November 23. Then why you did not disclose these facts in your audit report? So auditor would also say, I am not responsible to perform the going concern assessment. My role is only to evaluate the management's assessment and cover the same period as that used by the management. So management has considered 6 months as going concern. I have also considered this 6 months as going concern. So there is no default on my part as well. So investor would say management ने भी नहीं बताया, auditor ने भी नहीं बताया, but नुकसान तो हमारा हो गया. So this is the hardship with the stakeholders, you can say, and hence the standard of auditing has fixed the responsibility of the auditor. If the period is less than 12 months from the date of financial statements, then the auditor shall request auditor shall request from the management to extend it to at least 12 months from that date. Now, if the management does not agree to extend its assessment period on the request of the auditor, then the auditor will report the same to TCWG as per the requirements of SA 260. And auditor will also consider whether the assessment includes all the relevant information of which auditor is aware as a result of audit. कहीं ऐसा तो नहीं है कि auditor को कुछ evidence मिल गए regarding going concern issue, but management ने वो consider ही नहीं करे, and hence auditor will consider, or the auditor will check whether the assessment includes all the relevant information available to the auditor has been considered by the management as well or not. So let's take one more example. Whether my screen is visible? Now it is visible. Okay. So let's assume there is a company X Limited, and it is a practical case study. When I was doing the audit in the Ghaziabad, so I noted going concern issue in one of my clients. So I will not disclose the name of the client. So let's assume this is X Limited. Now what has happened? This X Limited is dealing in the manufacturing and sale of polythene bags. Okay, so this client is dealing in the manufacturing and sale of polythene bags in Ghaziabad city only. Now what has happened? This company was doing very good job. They have earned good profits. They were having good revenue. They were having good net worth. Now what happened? Suddenly the DM of Ghaziabad issued one circular regarding ban on the sale of polythene bags in the Ghaziabad city. Okay, they have not issued the circular regarding the ban on the manufacturing of the polythene bags. They have issued the circular regarding the ban on sale of polythene bags only in the Ghaziabad city. So when I was doing the audit of this company, I asked from the management whether you have performed your going concern assessment. So this company told me, yes, we have performed our going concern assessment. So I asked whether any events or conditions exist which may cast significant doubt on the entity's ability to continue as going concern. So they told me there is no condition exist which may cast on the significant doubt on the entity's ability to continue as going concern. So I asked whether you have considered the circular issued by the Ghaziabad DM, which have now told us no one is required or no one can sell the polythene bags in the Ghaziabad city. So they told me that yes, they have considered. Then I asked how now you are going concern company. So they told me that earlier they were selling their product or this polythene bags in the Ghaziabad city. Now they have the mitigation plan. So what is the mitigation plan available with the company? Now they are selling. What we will do? We will hire some staff, 5 to 6 marketing guy, and we will sell our polythene bags in Noida, in Meerut, in Delhi, in Faridabad, in Gurugram. Okay, so they told me that earlier they were selling their product only in the Ghaziabad city. Now they will sell their product in these cities as well: Noida, Meerut, Delhi, Faridabad, and Gurugram. So the mitigation plan is regarding the sale of their polythene bags in these cities. And what would be the impact? They will earn more money because their revenue will increase significantly, and they will have more profits. So they told me that I have or the we have mitigation plan available with us, and hence we are the going concern company. And when I evaluated the plan, this mitigation plan, I didn't found any hurdle in the implementation of this plan. So I said, okay, you are the going concern company. Now what happened? Let's assume instead of Ghaziabad government, instead of order of passed by DM of the Ghaziabad, this or this order has been passed by the UP government, UP government and Delhi government and Haryana government as well. Now I asked from the company, now UP government, Haryana government and Delhi government has banned the sale of polythene bags. Now how you are the going concern company? You cannot sell the polythene bags in these cities as well. So what is the mitigation plan available with you now? So they told me that what they will do, they will not deal further in this polythene bags, and they will set up a new plant in Punjab regarding the manufacturing and selling of, let's assume, plastic products. Okay, so when I heard the company is planning to shut down its existing business in the Ghaziabad, which is manufacturing and sale of polythene bags, and now they are planning to set up a new venture in the Punjab regarding the plastic products. So there is a big question mark on the existence of the company. There may be chances the company would be able to survive in the Punjab, and there may be chances the company will not be able to survive in the Punjab because they don't have the experience for dealing in the plastic products, right? And hence there is a material uncertainty exist. The company may or may not survive in the future, or you can say in the foreseeable future, and hence these facts are required to be disclosed in the audit report. So what are the additional procedures which I require to perform, or which the auditor are required to be performed if the events or conditions have been identified? So my screen is visible, my PPT is visible or not? Hello, am I audible? My PPT is visible. Okay, so what are the additional procedures which are required to be performed if the events or conditions have been identified either by management or by the auditor that may cast significant doubt on the entity's ability to continue as going concern? Then the auditor shall obtain sufficient appropriate audit evidence to determine whether or not a material uncertainty exists related to the events or conditions that may cast significant doubt on the entity's ability to continue as going concern through performing additional audit procedures, including including the consideration of the mitigating factors. So what was the mitigating factor available with the company? Earlier they were planning to sell their product in the city of Noida, Faridabad, Gurgaon, Meerut, etc. And again, when the UP government came up with the circular regarding the ban of this polythene bags, and Haryana government and Delhi government also issued this circular, then they are having another mitigation plan, which is regarding setup of a new plant in the Punjab for the plastic products. Now whether this mitigating factor would be successful or not, that is the second question, but they are having mitigation plan available with them. So these procedures shall include, or you can say what are the procedures which are required to be performed by the auditor. So where the management has not yet performed an assessment of the entity's ability to continue as going concern, auditor will request the management to make it assessment. Further, evaluating management's plan for future actions in terms of the feasibility. So auditor can evaluate where the management has prepared cash flow forecast, evaluating the reliability of the underlying data generated, determining whether there is adequate support for the assumption. So the company is saying we will now deal in plastic products and we will have, let's assume, a sale of 100 crore in the first year or the second year. So what is the educate support for this assumption, whether the company is having sales order available with them, whether the company is having any agreement with the customers. So what are the source document on the basis of which these assumptions are being made? Consider whether any additional facts or information have become available, and require the written representation. This is very important. It will require the written representation from the management their regarding their plans for the future actions and the feasibility of their plans of these plans. Okay, so what are the additional things which the auditor may check? So he can check determining the adequacy of the support of any planned disposal. So if the client is planning to sell its plant in the Ghaziabad city, so what is the adequacy of the support for this planned disposal of the assets? Now, whether or you can say analyzing and discussing the cash flow, profit, and other relevant forecast available with the management. Next one is analyzing and discussing the entity's latest available interim financial statements. So generally the audit will start, or generally means audit will always start after 31st March. You can do your interim audit as well, but the final audit will be start after 31st March. And it may take 1 month or 2 months or 15 days for the signing of the audit report. So you can ask from the management whether any interim financial statements have been prepared by the management or not. And if they have prepared their interim financial statements, you can evaluate, you can analyze, and you can discuss the same with the management. Reading the minutes of the meeting, this is again very important part. So you can read the minutes of meeting of the company regarding financing difficulties. If the company has if the company is having any negotiation with the bank, so whether the bank has approved the loan of the company or not, or uh, the company is planning to launch a new product or anything, means anything which is operating indicator, which could be operating indicator, financial indicator, and other indicator available with the company. Then obtaining and reviewing the reports of the regulatory actions. Then inquiring the entity's legal counsel regarding the existence of the legal litigation and the claims. So as this was one of the indicator that if their company is having demands regarding GST income tax, so you can check the status of these demands with the legal counsel of the company. So whether the company will win the case, whether the company will lose the case, you can check the status with your with the legal counsel of the company. Evaluating entities plan deal with unfilled customers order. So you are having customers order available with you, but you are not able to fulfill the demand of the customer. So you can evaluate whether this could be one of the indicator of the going concern or not. Next is confirming the existence, terms, and adequacy of the borrowing facilities. So we have covered these points as well. Now implications on the auditor's report. So before directly jump into the implications in the audit report, we can have one quick revision regarding the audit reports which could be applicable or which will be applicable regarding the going concern issues. So there is SA 700 which talks about the unqualified opinion. So if the financial statements have been prepared in all material aspects in accordance with the applicable financial reporting framework, then you will issue unqualified opinion. Then SA 705 deals with qualified opinion. If the financial statements have been prepared materially, if the financial statements are materially misstated or inability to obtain sufficient appropriate audit evidence, and the effective is material but not the pervasive. In that scenario, you will issue qualified opinion. Then SA 705 also deals with adverse opinion. If the financial statements are materially misstated and effect is material and pervasive both, in that scenario you will issue adverse opinion. Next one is disclaimer of opinion. So SA 705 also deals with disclaimer of opinion. So if you are facing issues regarding the obtaining sufficient appropriate audit evidence and the effect is material and pervasive both, then you will issue disclaimer of opinion. Next one is SA 706, which deals with EUM. So if the auditor wants to draw the user's attention to a matter presented or disclosed in the financial statement, and in that scenario, the auditor can issue EUM, emphasize of matter paragraph. And in that scenario, auditor will also mention that my audit report is not modified. So implications in the auditor's report. So use of going concern assumption is appropriate, but material uncertainty exists. So as I gave you the example of X Limited, which was dealing in the polythene bags, in the manufacturing and sale of polythene bags, and now they are moving or they are planning to set up a new plant in the Punjab. So company may or may not be successful in the foreseeable future. So the mitigation plan is available with the company. Hence, we would say going concern assumption is appropriate, but material uncertainty exists. And in that scenario, if their financial statements, or you can say the notes to accounts, disclose these facts, so these three facts are required to be disclosed, which are mandatory disclosure. So first one is events or conditions that may cast significant doubt on the entity's ability to continue as going concern. So what were the events or conditions? Firstly, Ghaziabad DM issued the circular. After that, UP government issued the circular. So these are the conditions which are having significant doubt on the company's ability to continue as going concern. So these facts are required to be disclosed in the notes to accounts. Then what is the action plan available with the company? So earlier the company was having the action plan regarding the sale of polythene bags in the city of Noida, Faridabad, Gurgaon, Meerut, Delhi. And after that, the company is having action plan to set up a new plant in the state of Punjab. And then management may be unable to realize its assets and discharge its liability in the normal course of the business. So as I told you while we started this session, in the normal scenario means when the going concern assumption is appropriate, it is assumed that management will be able to realize its assets and discharge its liability in the normal course of the business. But when material uncertainty exists, then you can't use the word shall or will. You will always use the word may. Management may be unable or may be able to realize its assets and discharge its liability in the normal course of the business. If these three disclosures have been appropriately disclosed in the financial statements, then you will issue unmodified opinion, but you will also have material uncertainty paragraph in your audit report. Why? Because going concern assumption is appropriate, but material uncertainty exists. And hence, if the proper disclosure have been made, all the facts have been disclosed in the notes to accounts, you will issue the unmodified opinion, but you will also give MU paragraph, that is material uncertainty paragraph. Now if these facts have not been disclosed or inadequately disclosed, in that scenario, what will you do? You will issue the qualified opinion or the adverse opinion, as the case may be. So crux is that if the facts have been facts regarding the material uncertainty have been appropriately disclosed in the financial statements, then you will issue the unmodified opinion and MU paragraph. If these facts have not been adequately disclosed or not disclosed, then you will issue the qualified opinion or the adverse opinion, as the case may be. Second one is use of going concern assumption is inappropriate. Now, the going concern assumption is inappropriate, but the financial statements have been prepared going concern basis. So conditions or events are existing which are having significant doubt on the company's ability to continue as going concern, but the management has prepared its financial statement using going concern assumption. Then what? And the auditor is of the opinion that use of this going concern assumption is inappropriate. Then what will you do? You will straightforward provide the or the issue the adverse opinion, irrespective of the fact whether the adequate disclosure has been made in the financial statement or not. So if the management has prepared its financial statement on going concern basis, but it was required to prepare its financial statement on liquidation basis because going concern assumption was inappropriate, then in that scenario you will straightforward issue the unmodified opinion, oh sorry, adverse opinion, irrespective of the fact whether the disclosure has been made in the financial statements or not. After that, management prepares the financial statements on liquidation basis. Now in this scenario, management has prepared the correct financial statements, and management gives the notes to account. The financial statements are prepared on liquidation basis and disclosed all the material facts affecting the financial statements. Means all the three disclosures, that is the events or the conditions which may cast significant doubt on the entity's ability to continue as going concern. Second one is action plan available with the company, and third one is the management may be unable to realize its assets and discharge its liability in the normal course of the business. All these three facts have been disclosed in the notes to accounts, and such financial statements have been prepared on the liquidation basis. Then what you will do? You will issue the unmodified opinion, but including mu para, because material uncertainty is there. Now, what are the illustrative formats of the auditor's report to address the going concern issues? So, first one is unmodified opinion. So, what could be the reason for material uncertainty related to going concern? Based on the audit evidence obtained, the auditor has concluded that a material uncertainty exists related to the events or conditions that may cast significant doubt on the company's ability to continue as going concern. Then the disclosure of the material uncertainty in the financial statement is adequate. Then you will issue mu paragraph, and the format could be, it is the illustrative format. So for issuing the audit report, you are required to refer the relevant essay. So we draw the attention to note numbers so and so of the financial statements because the management has already disclosed this material uncertainty paragraph in their audit report as well. So we draw the attention to note number so and so, which indicates that the company incurred a net loss of INR XXX, and during the year 31st March, as of that date, company's current liabilities exceeding its total assets by INRs this much. So as I gave you the example of X Limited, in which the current liability of the company was 55 lakh rupees, or sorry, 35 lakh rupees, and the total assets of the company was 20 lakh rupees. So you can mention here the 15 lakh rupees because your current liability is exceeding your total assets by 15 lakh rupees. So as is stated in note number so and so, again the reference of the notes to accounts, these events or conditions along with other matters set forth in this note indicate a material uncertainty exists that may cast significant doubt on the company's ability to continue as going concern. And you will also mention our audit report is not modified in respect of this matter because all the facts which were required to be disclosed have been given by the company. Second one is qualified opinion. So what is the basis for qualified opinion paragraph? As discussed in note number so and so, due to order raised by the government, the company does not foresee the future sale of polythene bags. So I have given the reference of my example. So the company does not foresee the sale of polythene bags, which was the single product of the company. Hence, it has planned to set up a new plant of the plastic products in the Punjab. Now, what has happened? The company has not conducted the financial or technical feasibility study with respect to the future demand in order to cover up the loss of the sales of the polythene bag. So the company is planning to set up a new plant of the plastic product in the Punjab, but it has not conducted the feasibility study, or you can say the technical study or the financial study with respect to the future demand. So the notes to accounts of the company has failed to mention this significant fact. What is the significant fact? That is failure to conduct the financial or technical feasibility, which indicates a material uncertainty that may cast significant doubt on the company's ability to continue as going concern. Therefore, it may be unable to realize its assets and discharge its liability in the normal course of the business. The financial statements, that is notes to accounts, do not disclose these facts. So all the facts have been disclosed by the company except these facts. The company has not conducted technical or feasibility study with respect to the future demand. So these facts have not been disclosed by the company. Other than that, all the facts have been disclosed by the company, and hence we have made the reference of that note in our audit report as well. So in this scenario, when there is inadequate disclosure, you will issue the qualified opinion. And when you will issue the qualified opinion, you will also give the reference to the in the other para, which is report on the legal and regulatory requirements, which talks the reference of which is given in section 143(3)(h). You will specify that matters described under the basis of qualified opinion paragraph relating to going concern may have adverse effect on the functioning of the company. Okay. Third one is again the example of qualified opinion. So what has happened in this scenario? Due to the order raised by the government, the company's business cannot continue due to significant fall in the sale of polythene bags, and the company does not have any alternative product or project to continue its business. Let's assume the company is now not planning to set up a new plant in the Punjab. So what you will do in this scenario, there is a material uncertainty. This situation indicates a material uncertainty that may cast significant doubt on the company's ability to continue as going concern. And the financial statements have also been prepared on liquidation basis, but the financial statements do not disclose such facts. You can compare this difference between these two paragraphs. So first one, in first example, I have mentioned the note number which is given in the financial statement. Here the company has not disclosed these facts altogether in the financial statements, but the financial statements have been prepared correctly because they are being prepared, or the financial statements are being prepared on liquidation basis, because management does not have any alternative product or the project to continue its business. So the management is planning to shut down its business and has appropriately prepared its financial statement on liquidation basis, but these facts have not been disclosed. So in this scenario, you will issue the qualified opinion, and again you will mention these facts in section 143(3)(h), that the matters described under the basis of qualified opinion para relating to going concern may have an adverse effect on the functioning of the company. Fourth one is adverse opinion. Under which scenario you will issue the adverse opinion? So what you can mention in the basis of adverse opinion para: due to order raised by the government, the company does not foresee future sales of these polythene bags, which was the single product of the company. Hence, it has planned to set up a new plant of the plastic products in the Punjab. The company has not conducted the financial or the technical feasibility study with respect to the future demands in order to cover up the loss of the sale of polythene bags. The notes of the financial statements has failed to mention this significant fact, which indicates a material uncertainty that may cast significant doubt on the company's ability to continue as going concern, and it may be unable to realize its assets and discharge its liability in the normal course of the business. The financial statements do not disclose these facts. Now, what is the difference between this adverse opinion paragraph and the qualified opinion paragraph? If you will see, all the disclosures have not been given under adverse opinion paragraph, because here we are not drawing the attention regarding the note number mentioned in the financial statements. The management has hidden these facts, or has not disclosed these facts in the financial statements or in the notes to accounts, that the company is going to set up a new plant in the Punjab, and the physical, oh sorry, financial technical feasibility has not been conducted by the company, and it may be unable to realize its assets and discharge its liabilities in the normal course of the business. So all the facts have not been disclosed in the financial statements, hence I have not mentioned the note number here. And in this scenario, what you will do, because the facts have not been disclosed by the company altogether, and in this scenario you will issue the adverse opinion. And again, under report on legal and regulatory requirement, you will mention that the matter described on the basis of adverse opinion para related to going concern may have an adverse effect on the functioning of the company. Now, adverse opinion again, example number 5. So what is the scenario? Due to the order raised by the government, the company's business cannot continue due to significant fall in the sale of polythene bags, and the company does not have any alternative product or project to continue its business. This situation indicates a material uncertainty that may cast significant doubt on the company's ability to continue as going concern in spite of such adverse situation. The financial statements have been prepared on going concern basis. So you can see the difference between this example, where facts have not been disclosed, but the financial statements have been prepared accurately on liquidation basis, because the company is not having any alternative product or project to continue its business. And here case study is similar. The company is not having any alternative product or project to continue its business, but the financial statements have been prepared on going concern basis. In the earlier example, or in the previous example, the financial statements were being prepared on liquidation basis. So the accounting or the preparation of the financial statement was correct. But in this scenario, the company is preparing its financial statement on going concern basis, and hence, irrespective of the fact whether these facts have been disclosed in the financial statements or not, you will always issue adverse opinion. And again, the report on other legal and regulatory requirements, you will mention that the going concern may have adverse effect on the functioning of the company. Now I have two case studies. So case study number 1 is XYZ Incorporation is a manufacturer of television. Domestic market of the specific products are not doing well, and therefore many entities in the business are switching to exports. As per the audited financial statements for the year, entity had net loss of 120 million. Entities having net loss of 120 million. At the year end, its current assets aggregate 1200 million and current liability aggregate 1500 million. So its current liability is exceeding its current assets. So there is adverse key ratios as well. So it means if the company dispose of all its property, plant and equipment and realize all its assets, even though it would not be able to repay even if its current liability portion. Again, due to unexpected favorable change in the government policies. So there is a favorable change in the government policies for electronic industry. The entity is projecting profits in the coming years. So it is only the estimation. The shareholders of the entity have arranged alternative additional source of finance for its expansion plans to support its working capital needs in the next 12 months. So what is the response? Two factors that raise doubts about the entity's ability to continue as going concern are the net loss of 120 million and working capital deficiency, which is current liabilities 1500 and current assets is 1200 million. So the net deficiency is 300 million existing and the balance sheet date. And what are the mitigation plan or the mitigation factors available? So there are two mitigating factors: the arrangement made by the shareholders to fund to the entity's expansion and working capital needs, and projected future profitability due to expected favorable change in the government policies for industry the entity is operating in. So what the auditor will do in this type of scenario, the auditor, if the auditor is of the view, based on the available evidence including reasonability of the future profitability, that there is a material uncertainty relating to the going concern for at least next 12 months, there is a need to include the section in the material uncertainty paragraph relating to going concern. However, it is recommended to include a suitable note in the financial statements. So the company so the going concern assumption may be appropriate due to the favorable change in the market and the shareholder support, but material uncertainty also exists in the company because there is a net loss of 120 million and the current liabilities exceeding its current assets, which is again a financial indicator. So material uncertainty exists. Hence, the auditor may issue unmodified opinion on the basis of the mitigation factor available, but it will also include the MU paragraph. Next one is, a company is an exclusive seller in the country for retail sale of the imported branded garments and was set up 2 years ago, having share capital of rupees 1 lakhs and unsecured loan of rupees 200 lakhs. And it has accumulated losses of 50 lakhs. Okay, it has accumulated losses of 50 lakhs. The unsecured loan of the company has been granted by the promoters of the company along with his family. The company is having negative net worth and negative working capital. Both are negative. The promoters have sufficient net worth and have plans to invest in the business of the future. So again, when the promoters or the shareholders or the holding company of the company have planned to provide the fund to its subsidiary company or to the company, then also the auditor will also evaluate the criteria, or you can say the eligibility of the promoters, means whether the promoters is having so much fund that it can give to the its holding company, or sorry, to its subsidiary company or to the any other company, or only it is a document where or we can see that the promoters have agreed to provide the support. So we should also check the eligibility of the promoters as well. So how should the auditor gather sufficient and appropriate audit evidence to conclude the appropriateness of the going concern basis? So the auditor should obtain and review management's assessment of going concern basis of accounting, which includes cash flow projections, detailed business plan covering the period of assessment, and support for the entity's ability to obtain new funding. So auditor will also evaluate the other things, means the cash flow projections, detailed business plan covering the period of assessment, support for the entity's ability to obtain new funding. Auditor may also obtain a support letter from the promoter for the financial support for at least next 12 months. In case of the support letter, auditor should also assess the intent and the capability of the promoters to provide the provide the financial support. So whether the promoter is capable to provide this fund or not, he should also assess this. However, in the present circumstances, material uncertainty exists. Why? Because there is a negative net worth, there is a negative working capital, company has accumulated losses and the share capital is only 1 lakh rupees. So accordingly, the financial statements should include adequate disclosure, including the availability of the financial support from the promoters. So the management is required to disclose in the notes to accounts the conditions or the events that are casting doubt on the company's ability to continue as going concern. Then it should also include the mitigation plan. And what is the mitigation plan in this case? That is the support letter available with the company. And then the management may be unable to realize its assets and discharge its liabilities in the normal course of the business. So all these three facts are required to be disclosed in the notes to accounts. Then the auditor should report under a separate paragraph material uncertainty related to going concern if adequate disclosures, means all these three disclosures have been made by the company in its financial statements. And what could be the format of the support letter? So it has been given in the implementation guide on the SA 570. So this could be the format. This is again the illustrative format. So it could be issued by the parent company. So I have taken the example in my case regarding the parent company. So the parent company is issuing the support letter to its subsidiary company. So in this parent company may write that we XYZ Limited, the parent company, confirm that we will provide financial support to ABC Limited in order to meet the shortfall of in its fund requirements over banks and other borrowings to meet out the projects which are in progress and other liabilities, including the loan from the other group companies, if any, for a period of not less than 12 months, because the next assessment will be made on you can say 31st March 2024. As we discussed, at least 12 months period is required to be considered by the management for making the going concern assessment. So this support letter is required for at least 12 months from the date of financial closure of the accounts of the company for the year ended, you can say 31st March 2023. This letter is being issued at the request of ABC Limited in respect of the support for considering it as a going concern for the financial year ended 31st March 2023. So this is done from my side. Now we can have a question answer round. Hello. Hello. Am I audible? So we can have question answer round. Hello. Hello. Hello, sir. I am audible.
Can you hear me, sir?
Yes, yes. Now I can hear you.
Sir, there were some technical issues, sir.
Okay, no worries.
Just a moment, sir.
Yeah, yeah, sure. Take your time.
We are trying to fetch the question, sir. First question is, uh, sir, directors keep proposing revival of textile co-defunct for more than 10 past years. No concrete action taken so far for renewal. Can you guide?
Can you repeat the question?
Yes, sir. Sir, directors keep proposing revival of a textile company defunct for more than 10 past years. No concrete action taken so far for renewal. taken so far for renewal. So best way to report
So
for this is, sir.
if the facts have already been disclosed in the financial statements, means in the notes to accounts, then you can refer the these facts in your audit report, giving the reference of the notes to accounts.
Yes, sir. So whether there is a difference between auditors of private limited companies and public limited companies, and there is some impact on this going concern.
Means this SA 70 deals with all types of auditor. It doesn't matter whether it is a auditor of a private limited company or the public limited company. So this going concern issue is required to be assessed by the management of every company, whether it is a private company or whether it is a public company, and the auditor is also required to deal with this scenario in its audit report in accordance with the SA 700, 705, 706 as we discussed, and there is no difference between these scenarios. Doesn't matter whether it is a private limited company or public limited company.
Yes, sir. Yes, sir. So all reserves and investments symphonized to start a subsidiary companies abroad. New project delayed for more than 5 years due to the pandemic and political unrest. This has adversely affected Indian holding company functioning, turning into the NPA. Please guide.
So again, if the facts have already been disclosed in the financial statements and auditor is of the view that the material uncertainty exists in the financial statements of the company, then he may give unmodified opinion but reference to the MU paragraph. And if these facts have not been disclosed in the financial statements, then he can issue the he can issue the qualified opinion if the effect is material but not the pervasive. And if the effect is material and pervasive both, then in that scenario he will issue the adverse opinion.
Yes, sir. Yes, sir. So for a closely held private limited company, due to some financial transactions entered into the company's 5 years back, it reports it reports native net worth for 5 years. What is the obligation of the auditor as far as reporting is concerned?
Negative net worth.
I repeat, sir, for a closely held private limited company, due to some financial transaction entered into the company 5 years back, it reports negative net worth for last 5 years. What is the obligation of the auditor so far as reporting is concerned?
So negative net worth is only one of the indicator, as I told in my session, that it is a indicator only, financial indicator. The company may have mitigation plan as well. If the company is having mitigation plan available with the company and the facts have already been disclosed in the notes to accounts that there is a negative net worth in the company, means the events or conditions that are casting doubt on the company's ability to continue as going concern. Second is, if the mitigation plan is available with the company, it should also be disclosed, and it will also be disclosed that all the assets will be realized in the normal course of the business and the liabilities will be discharged in the normal course of the business. So may be discharged in the normal course of the business. So if all these three facts have been disclosed, then the auditor may give the unmodified opinion but MU paragraph, including MU paragraph, because there is a material uncertainty exist.
Yes, sir. Yes, sir. Yes, sir. Sir, when management has no intention to liquidate the company, why they will disclose uncertainty in notes to accounts if they don't want is the responsibility of the auditors?
So there is no requirement to disclose in the notes to accounts that the management has the intention to liquidate the company, means management is not having to liquidate the company. So what is the case? As we discussed the difference between AS and NDS. So AS says negative disclosure is required, means if the company does not want to continue as a going concern, then disclosure is required. But under NDS, para 25 deals with this type of scenario, and it says irrespective of the fact whether is a company is a going concern or not, means the entity is having intention to liquidate or not, the note regarding the going concern assumption will be provided by the management. So if the company is having intention to continue its business, then also a disclosure is required. And if the company is not having the intention to continue its business, then three notes are required, which we have discussed: the events and conditions casting significant doubt, uh, basis of the preparation of the financial statements, and the action plan available with the company.
Sir, there is one question from one of the member relating to the trust.
Mhm.
Trust X is in the business of construction, mainly financed by another sister trust Y.
Okay.
The trust X is having very small corpus and has accumulated huge losses in the project. The trust is subject to tax audit only. The trust management is having other projects in near future and with good profitability. What kind of notes of accounts to be given?
Notes to accounts.
Yes. What kind of notes to be accounts to be given by the auditor?
So this is the question relating to AS or
Yes.
AS, I would say, because this is not the question relating to going concern.
Huh.
Okay, because you are saying the balance sheet or the financial statements are being prepared only for the tax audit purpose and
Yes.
not for the general purpose financial statements. And this standard deals with the general purpose financial statement and not for the special purpose financial statements. So means it depends on the you can say, as a conservative approach, if the companies or the trust is having negative net worth, or the, as I told you, that current liability is exceeding the total assets, so as a conservative view, you can disclose this facts in the notes to accounts. But this standard does not deal with this type of situation if the
Yes.
balance sheet is being prepared only for the tax purpose,
Yes.
because
Yes.
it is for special purpose financial statement, not the general purpose financial statement.
Sir, if there are no business operation in case of subsidiary, no liquidity, no employees,
Mhm.
can be considered as going concern with management intention not to liquidate it, but with the financial support from its holding company,
So if there is a no business in the company,
no
there is
employees,
a no employee in the company,
no liquidity,
no liquidity in the company.
hmm,
So
but
then why
management
we?
intention not to liquidate, but with the financial support from holding company.
So it is a question mark. Then why we have incorporated this company? What is the
Hmm,
intention of the management? Why they are
hmm,
not shutting down this company?
hmm, hmm. So
Are you
question is,
getting?
yes, that is fine. But question is whether it is fine, it is right or not, as far as the from going concern point of view or not.
These facts needs to be disclosed in the financial statements, I think. Means
Yes,
it is my view, the fact should be disclosed in the company that the operations will be started in the foreseeable future. Otherwise, why would anyone incorporate any company if it has no intention to do the business in the company?
yes,
So the fact should be disclosed in the notes to accounts.
yes, yes, yes. So second last question, whether the going concern with get affected in dealing with the electronic products in the changing technology?
Yes, 100%. There could be
100%.
operating indicators.
Hmm.
There could be operating indicators. So
Yes,
we
yes,
discussed the example of Nokia. Earlier we were using the feature phone, now we are using the Android phone. So there is a change in the technology.
yes, yes, yes.
So the company may face the going concern issues. Absolutely.
Hmm. Sir, if a company has a financial indicator like financial crunch due to the incurring losses in the previous year, but last 3 or 4 years, company incurring profits, having positive net worth and total assets exceeds the total liability,
Mhm.
then is it required to report in the auditor report due to such financial crunch?
No, because now there is no financial crunch. As you told me that the company is having profit, the current liability is less than the current assets, or the total liability is less than the total assets. It means you are having positive net worth as well. So now there is no need. There is no indicator.
Yes, sir. Yes, sir. So last question. A partnership firm has incurred losses and its partners are wealthy people having securities with greater values, but the business is not prospering in their near future. There is huge bank loans fully secured, but bank knows this fact. Disclosure by the management is favorable to the concern, but as an auditor, he feels that this particular business may not proper, but the partners are in a position to repay the debts on the spot. What should be done while reporting it as a going concern?
So there is a separate legal entity, means the
Hmm.
partnership has separate legal identity and the partners are having separate legal identity. Now it depends whether the loan has been taken by the partnership firm, the partners have provided the guarantee or not. Okay. And what are the mitigation plan available with the company, whether the partners are ready to support to this partnership firm or not. So it depends on the several facts whether this company is a going concern, sorry, whether this partnership firm is a going concern or not. So if there is a no mitigation plan available with the this partnership firm, and it is having losses, it is having negative net worth, it has huge loan which the partnership firm is not able to repay, in that scenario going concern issue is there. And even sorry, moreover, if the partners are not ready to provide the support letter, then
Yes,
going concern issue is there, and this situation should be deal in the audit report, means the disclosure should be there in the audit report.
yes, sir. Yes. So thank you so much, sir, for such a wonderful deliberation. We
Thank
have
you, sir.
gained a lot through your deliberation. Hopefully, our members have also gained a lot through your deliberation, and you have successfully answered all the questions of the members, as well as enlightened all the intricacies relating to the going concern. More than 2,500 members are live at this
Oh,
particular time, and as the topic is very important and very relevant for
right.
all of us. So you have justified with your presentation. So once again, thank you so much on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India for sparing
Thank
your
you so much,
valuable
sir.
time
Thanks
and
for giving me this
acceding to
opportunity.
our request. Thank you so much, sir. Thank you.
Thank you. Thanks.
And
Bye
thank you
bye.
so much all the participants for their
Thanks everyone
patient hearing.
for
Thank you, sir.
joining this session.
Thank you, sir. Thank you. Thank you.
Thanks. Bye bye.